Since the time money has been used for transactions, we have relied on organizations like banks and financial institutions, as well as the government, in order to authenticate, verify, and validate our transactions. These are intermediaries who build trust in a transaction and who ensure that a record is maintained of the transactions conducted on a daily basis. While physical money and documents were still easy to record and maintain, digital transactions with digital money and digital files are concerned, makes it even more difficult for us to authenticate and validate. The need for intermediaries who can authenticate and validate digital transactions was extremely important because digital assets stand a higher chance of being replicated. It leads to the problem of double spending, where the same unit of money is used more than once. But more so, what if we were able to transact and create contracts without the intervention of intermediaries at all and still maintain the authenticity of the transaction or the contract? Interesting as it sounds, the technology for this didn't exist a decade ago. But blockchain is finally here and it can make such things possible. The technology is yet to complete mature and it is still in the process of trials by many companies. If we are able to find a way in which the limitations of blockchain can be reduced and it can be made mainstream, transaction costs may go down invariably and the global economy may see a huge transformation. The world was first introduced to blockchain through Bitcoin in a 2008 white paper that was authored by a person or a group which goes by the pseudonym Satoshi Nakamoto. Nakamoto talked of a technology that used a peer-to-peer electronic cash system which was termed as Bitcoin. It removed the need of intermediaries completely from the system and allowed for payments to be made directly. Lots of people had their reservations about it when Bitcoin was introduced. But it also caught the attention of technology enthusiasts who found the decentralized system of payments to be exciting and innovative. While the Bitcoin was an amazing development, it was the mechanics behind it that garnered a lot of popularity and was truly radical. People began to realize that it wasn't Bitcoin that was the most attractive part of the white paper release. Blockchain was far more revolutionary and had more uses than the digital currency with which it was discovered. Bitcoin is most commonly associated with blockchain, perhaps because it was first application to have used the technology. Today, the technology is used by many other altcoins and has many companies from different industries using the technology too. Its popularity grows with the growing reach of the internet and has more relevance today than in 2008 when it was first used. How it works. The name blockchain comes from the very basic fact that the technology creates a chain of blocks where each block has information related to transactions occurred at a specific period of time. It is decentralized in nature. The blockchain is a distributed ledger which continually records transactions to update all parties of who owns what. It does the job of centralized administrations like governments, banks, and financial institutions. The blockchain has a network of replicated databases which is updated via the internet and can be seen by anyone who has access to the network. Some blockchains may be restricted, while others are open to public view. It depends on the nature of the blockchain and the requirements of the company or organization using the blockchain. Every block constitutes of a number of transactions that may have occurred since the creation of the last block. It contains a hash of the previous block which supports the creation of a chain where each block can trace only one path back to the original block, which is usually known as the genesis block. The blocks follow chronological order because it would otherwise not be able to find out the hash for the previous block. The block is created to be computationally so difficult that it is almost impossible to modify once it becomes a part of a chain for a while, because changing one block requires a change in the entire chain. This feature makes Bitcoins irreversible and is also the main reason why people like the idea behind the Bitcoin. Sometimes two blocks may be created at almost the same time with very little time difference. This leads to a one-block fork. In situations like these, the next block is built upon whichever block was received first. So the hash used for the next block decides which block is included and is part of the original chain. The other block, which forms a shorter chain, is not used for anything in the future. All valid transactions which were included in the block in the shorter chain will be queued once again and added to a new block in the main chain. These blocks on the shorter chain are known as orphan blocks because they are not used any longer and they have no parent in the longest chain. The blockchain technology uses hard fork as a method of bringing a major change to the protocol, which makes it necessary for all nodes and users to upgrade to the latest version of the protocol software. This ensures permanent divergence from the blockchain that was previously used, which renders nodes running on the old version incapable of working till they are updated to the newest version. The fork has two paths, where one carries forward the new version while the other continues the older version. Users who are on the older version end up realizing that they are using a version of blockchain that is no longer relevant, and they automatically upgrade to the latest version. Hard forks may be used for a variety of reasons. Ethereum used hard fork to aptly handle the security breach they faced on the DAO, Decentralized Autonomous Organization. By creating a hard fork, it was able to invalidate the transactions confirmed by the nodes which were not using the upgraded version of the software. It helped in ending the breach and also ensured that the DAO token holders were able to get back their Ether funds. When a blockchain is required to add new features and functionalities that can be backwards compatible, then a soft fork is used. It is known as a soft fork because users can choose to go back to the old rules. Nodes following the new rules would ignore blocks created on old rules if the majority of the blocks being created are using the new rules. The 5 main principles underlying blockchain technology are: first, distributed database. The data held by a blockchain is accessible by every party on the blockchain. This includes the entire data, including the history. The blockchain does not hold the data back for a single person or a group. This means that every party can verify the transactions of its transaction partners without the help of any intermediary. Second, peer-to-peer transmissions. Blockchain technology allows communication directly between the peers, taking away the need for a central node for communication. This means that every node stores and forwards the information to all other nodes. So, unlike the traditional methods of record keeping where transactions are stored by a central authority like the government or the bank, blockchain technology makes information easily available and accessible to users who are on the network. Third, transparency with anonymity. The transactions stored on the blockchain can be viewed by everyone on the network. Every user or node on the blockchain is assigned a unique alphanumeric address of 30 characters or more. This alphanumeric address identifies the user from the rest in the network. A user has the option of sharing their identity or keeping it anonymous. Anonymity does not hinder the experience or the quality of transactions conducted on the network because transactions use addresses and are not personal identities. This makes the system secure and allows users to avoid the breach of confidentiality of records, especially when it comes to personally identifiable data and other confidential records which can be used to harm or damage a person and their reputation. Fourth, permanency of records. Transactions recorded on the blockchain are permanent in nature because deleting one record automatically affects everything else on the blockchain. For a person to hack into a specific block on the chain, he will have to hack all the blocks that were created before that block in the chain and ensure that it is done on all the ledgers distributed around the network. To accomplish a task of such magnitude is close to impossible since it requires a huge amount of resources. This means that the records are very secure and they cannot be tampered with. This is the reason why it is known as a chain, since the blocks are tied to each other in chronological order. Fifth, computational logic. Keeping in mind that blockchain is digital in nature makes it possible for the ledger to use computational logic, where different sets of programs and algorithms can be used to trigger transactions between the nodes and to uphold the security of the blockchain. Understanding the 5 main principles of blockchain technology helps in comprehending how the technology works and how effective it could be. When a digital transaction is performed, it is put together with other transactions that may have occurred during the same period of time in a block that is cryptographically secured. The Bitcoin blockchain puts together transactions that may have occurred in approximately 10 minutes from the creation of the last block, and then this information is sent out on the network. Miners, who are members in the network with very high computing power, compete with each other to be the first to validate the transactions in the block by solving complex coded problems. The first person to be able to solve the problem is able to claim a reward. For Bitcoin miners, the current reward is $12.5 Bitcoins and the transaction fees for transactions stored in the block. The miner who claims the reward gets to place the block in the chain. The block is time-stamped and it is added to the chain in linear, chronological order. This chain of blocks has a record of every transaction that would have been conducted within the network, and all members in the network will have access to all these transactions, knowing fully well who owns what. Being decentralized in nature, the blockchain makes intermediaries seem obsolete. While financial institutions around the world are beginning to recognize the power of blockchains and use it to their benefit, proponents of digital currencies support the idea of decentralization, which takes away power from banks and governments and supports the availability of information for everyone. The conceptual framework of blockchain makes it ideal for financial processes because it eliminates the need for intermediaries like banks, which tend to be bureaucratic, time-consuming and expensive. It is being considered as a digital alternative to banks, and while it is still in the early stages of growth, recent developments prove that more companies are beginning to explore the benefits of blockchain technology. Blockchain is also a promising tool for applications other than cryptocurrencies. It has the ability to greatly transform our current perspective of the Internet of Things, IoT, and it can also bring a radical change in banking and banking processes. It is very similar to a shared spreadsheet. In this case, the data on a blockchain is shared globally and is accessible to anyone who is a member on the network. Only verified transactions can make it to the blockchain, and once recorded, this data becomes irreversible, making it difficult for people to use the same currency for 2 transactions. How can blockchain transform the global economy? Blockchain technology is powerful, the idea behind it is unique. It combines 3 different ideologies which have existed separately for a considerable period of time and have now been brought together in the blockchain, which was introduced by Satoshi Nakamoto. These 3 technologies are the Internet, private key cryptography, and a protocol which targets incentivizing. Having been used by Bitcoin for a long time, blockchain has gained the attention of people around the world because of its powerful concept. It aims at reducing costs tremendously and changing the manner in which transactions are conducted in today's world. We are looking at a huge reduction of intermediaries, with the job of lawyers, bankers and government officials being handled very effectively by the blockchain. With a distributed ledger available for everyone to access and check data for others on the network, transparency will be high and ease of access very gratifying for the users. The technology attacks directly at the weaknesses of the current system of business and governance and turns the tables to create new foundations for the global economy. Here's how economies around the world can leverage the unique ideologies of blockchain. Blockchain technology holds a lot of power in it, but the use of the technology aims at decentralizing power and helping everyone have easy access to information. Here are some of the ways in which blockchain technology can be used by the world. First, blockchain finance. While Bitcoin is the first and most popular user of the technology, many other cryptocurrencies are based on the same ideology. We aim at ensuring that all financial transactions are conducted with high security in mind. Exchange of money at this time mainly requires mediators like banks. However, blockchain technology puts transactions on a digital record, and copies of this record is shared and continually updated with everyone who is a part of the network. This is the most prominent use of blockchain technology. The system of using miners to validate the transactions and build blocks on a chain, recording all transactions right from the beginning, makes the entire system free of risks like hacking or trying to spend the same currency more than once. Second, asset management. Traditional trading systems can be very tedious. The process of managing assets is considered risky and expensive. It entails transaction fees, which are paid to intermediaries who can help in the effective management of assets. All parties maintain their own records of the assets, and a lot of this involves the chances of error, with multiple records being held by different people. Blockchain ledgers simplify things where the same record is available for one and all. The records are encrypted, which means that once validated, they cannot be modified. They are easier to access if you are on the network and readily available as well. With fewer intermediaries, profits realized through an asset can be considerably higher too. Third, insurance claims processing. Processing insurance claims involves a lot of room for error. There is the possibility of processing fraudulent claims, the need to go through every claim filled carefully so that the details can be extracted and ensured that the insurance claim being processed is for an honest claim. It becomes a hassle for insurance companies as well as honest claimers, since every claim filed has to be thoroughly checked. With the advent of technology that removes the chances of fraudulence by providing risk-free management of the claims with complete transparency, there is a higher chance of insurance claims becoming more simplified than what they currently are. The assets owned by a person can be captured by the insurers and encrypted on the blockchain, providing correct information for anyone accessing the files. Fourth, international payments. Global payments continue to be a problem even in this technologically advanced era. Financial institutions throughout the world are trying to look for solutions in the blockchain when it comes to payment remittance. Santander is one of the banks that merged blockchain to its payments app in 2004, and it allows its customers to make international payments 24 hours a day, clearing the payments the next day. There are other companies that are exploring possibilities of benefiting from the blockchain technology. Fifth, money lending. It may seem implausible, but money lending is totally possible through the blockchain. The system can make it possible for people with low or poor credit scores to get a loan from lenders on the blockchain network who can take your property as a collateral. The entire transaction is conducted on the blockchain for transparency. You can use smart technology in your property, and registrations of tangible and intangible properties like your home, car, company shares and property titles can be added to the blockchain, where it can establish who has the right to own the property and who does not. This can be kept as a collateral with a lender who can lend the money, and everyone on the blockchain will have this information. Where banks may have charged higher interest rates, a lender on the blockchain may be able to do it at a lower interest rate. Sixth, smart property made better. We are already using smart keys in the form of car keys and phone pins. Tapping the car key helps you open the car without inserting the key in the lock. At the same time, phones are unlocked by entering a PIN or a pattern on the device. But these can be less secure, keeping in mind that they are stored physically and locally. The information stored on your phone's SIM card can be lost and not redeemed, but information stored on the blockchain is not locally stored, and miners are able to replicate lost protocols. Seventh, Internet of Things made more secure. When any device is able to connect to the internet and talk to other devices, it is known as the Internet of Things, IoT. This is another fast-growing technology which has a lot of applications and uses. Governments and companies will be able to improve the quality of living and services by many times through the use of IoT. If you forget to close the garage door, a smart sensor will automatically identify this and close the door for you. If your house door is open and the air conditioning is on, then the air conditioning will automatically adjust to the change in the temperature through sensors that sense the open door. You will also be informed about the open door and you can choose to close it. Your phone alarm can talk to the smart coffee machine and update the brewing time according to the alarm set on the phone. Interesting as it sounds, knowing that so many devices can talk to each other involves the problem of sharing too much information, which can be exploited if not protected. This is where blockchain technology can be used to protect the information being shared by devices through encryptions. This ensures ownership of the devices is protected and everyone on the network is aware of who owns what. 8th, smart contracts. Smart contracts have the ability of executing automatically based on the if this then that IFTTT code. It can be extremely useful in a number of ways. For example, the music company right now faces a lot of problems related to piracy. Many artists are unable to stop the transfer of music from one device to another. This means that many people take advantage of listening to these artists without paying for the music they created. An artist can use smart contracts using the blockchain technology to ensure that the people who access their music pay for it. They can set different charges depending on the purpose that it is being used for. If the music is used in a movie, then it entails the payment of a certain amount, and if it will be used as a ringtone, then the user may pay a specific amount for using it as a ringtone. In the same way, smart contracts can be created for marriages, divorce, house sales and anything that involves a transaction between two people or groups. 9th, healthcare. Personal health records are considered confidential and is sensitive data which should be available only to specific people who are authorized to access such information. Healthcare companies are beginning to explore the scope of blockchain technology with regards to storing medical information securely. The records can be encrypted and stored with a private key that allows access only to those who hold the key. Medical companies can use this ledger for research, supervision of drugs, and to manage healthcare supplies. Even information related to surgeries or medical procedures can be shared with insurance companies using the blockchain, so that insurance claims can be processed quickly and easily. 10th, governments. Governments can change the way they operate and bring in a large amount of transparency by using the blockchain technology. The 2016 elections in the USA brought a lot of criticism, and many people consider the need for a recount in certain states. Votes can be manipulated if hackers enter the voting system and rig it. When a government makes use of blockchain technology for voting, this can be prevented. Every vote will be encrypted and added to the chain, making it difficult for a hacker to hack into any one block and change the votes. It can also allow individuals to view and confirm their votes. This is one of the ways in which governments can use blockchain technology. Dubai is already set to become the first blockchain government where it can provide access to government-sourced data like to the public. Companies can use this information for improving the quality of services they provide, families can look into data regarding medical research being conducted or overseen by governments, and farmers will be able to utilize information available to improve the quality of farming. While data is released by governments at this time as well, a lot of it is very less effective and is unable to reach the audience from whom it is targeted. Taxes are another government aspect which is heavily criticized. The blockchain can help in reducing the process of filing for returns or for paying taxes, making it easier for the public to access information regarding the payments and returns. It also offers higher security than the average method of tax filing used at this time, which is prone to hacking. 11th, personal identity. Everyone around the world today worries about securing their identity. Identity theft can be extremely dangerous and it can cause a lot of harm to the victim. Blockchain technology helps in the encryption of personal data and creation of a protected data point that allows a person to share data only with those who they want to. With the highly secure technology used in a blockchain, no one will be able to hack into the data and access information without authorization. An example of blockchain being used for personal identity was the introduction of a digital passport, which was launched on GitHub in 2014. The passport was stored on the ledger, and it is stored on the ledger with a Bitcoin address and a public IP. This means that it has been validated by the blockchain users. 12. Inter-organizational data management. The increased use of Internet has led to the creation of huge amounts of data. While data is good and can be used in many ways, the problem that arises among organizations is how to ensure that this data is managed effectively too. The problem no longer lies in the collection of data, but in the secured storage of such data that is gathered over the Internet. A lot of this data involves personally identifiable information which is very sensitive and can lead to damage. Blockchain helps in encrypting such data and allowing access to only specific persons. When data like this is shared between organizations, knowing that it is secure makes it easier for people to trust the companies. 13th. Distributed cloud storage. At this time, cloud storage makes things extremely easy and allows us to access the same data from multiple devices, but it requires a person to place trust on the company providing such services. Instances of cloud storage companies being hacked has also been in the news. The companies have complete control over your assets and they can easily access the data you have stored on their servers. Blockchain decentralizes this and puts the people in control of their data. Not only does it increase the level of security it provides to people with the freedom of storing their files without having to depend on a cloud storage service provider. There are startup companies which are already exploring this idea. By hashing your data and having it stored in a location secure enough, like the blockchain, is the key in ensuring security. These are the many ways in which blockchain promises more security and smoothens the current processes related to transactions. By applying this technology, companies and industries will be able to connect and transact with customers at a new level. This can help the economies of the world become more transparent and also encourage better communications between countries. Limitations of blockchain. Adopting new technology doesn't always happen very smoothly. The TCP or IP protocol, for example, was introduced in 1972. It formed the foundations for developing the Internet. In its early stages, TCP or IP wasn't easily understood. It was considered complex and was limited to the knowledge of few people. It was criticized by a few, and some felt that it may take away privacy. Over time, the proponents of the technology were able to prove its abilities, and today it has altered the global economy with the biggest companies in the world using the Internet for numerous transactions. A lot of transactions, communication and interaction takes place on the Internet, with the economy having been reshaped. The same way, blockchain technology is in its nascent stages. Early adopters believe in the power of the technology, yet it has not matured enough for the world to make it mainstream. Blockchain technology is still being understood and its applications being explored by most industries. While some governments, like the government of Dubai, is beginning to aim towards using blockchain in the near future, many countries want to avoid it because of its complexity and for the fear of using a technology that is somewhat unknown to most people. Here are a few ways in which blockchain is still limited. First, it is complex. The complexity of blockchain technology makes it difficult for people to adopt it quickly and easily. The idea behind it is simple, but the application of blockchain in a business requires a number of changes to the manner in which the business is conducted. Cryptography is not simple. This is why the use of the blockchain may find some hindrances. Second, it is in its infancy. It is still too early for businesses and governments to recognize the potential of this technology. Blockchain was earlier closely linked to the dark net and news of the Bitcoin, which uses blockchain in the infamous Silk Road. This gave the blockchain a bad name right when the technology was in its early years. Even right now, blockchain has not matured completely for companies to adopt it. Startups and creative entrepreneurs are beginning to explore its potential, but it is still a long way from becoming mainstream. Third, it requires new expertise. The need for expertise regarding the blockchain is very important for businesses to adopt it. If lawyers had to begin using it, they would first have to acquire knowledge about how it is used. They will also be required to understand the process of creating smart contracts and working on the blockchain before it can actually be used by them. The technology is not simple, and the fact that added expertise is required may also limit the use of blockchain at this time. Fourth, the 51% attack. A notable flaw in the blockchain, which can register errors or create a problem in the future, is when more than half of the computers on the network tell a lie. Then the lie will be accepted as the truth and everyone will deem it to be right. Satoshi Nakamoto talks about this as the 55% attack in the white paper which he released in 2008 launching Bitcoin. This has not happened yet, and Bitcoin mining pools are closely monitored so that no one gains that amount of power or influence on the network. It also means that if something illegal is uploaded onto the blockchain, then the entire chain will be considered to be illegal because the blocks are interconnected and a single block cannot be modified. James Smith, who is the head of Labs program at the Open Data Institute (ODI), tested this by adding an illegal encryption key for HD DVD on the PlayStation to the blockchain. Through the blockchain, it is now on machines on the network, proving that illegal data can make the entire chain illegal. Fifth, blockchain politics. The blockchain has seen a fair amount of politics as well. Since everyone does not hold to the same viewpoint, sometimes miners who are currently incentivized to do their work end up disagreeing with each other. These disagreements may not be as impactful today with lesser people using the blockchain, but it can create big problems if the number of people on the network goes up. Usually disagreements, this time, happen around the question of forking a blockchain. While some want to update the chain, others may want to continue using the old blockchain. Sixth, high energy use. Early adopters of the blockchain technology often talk about the manner in which blockchain can help save resources and reduce energy consumption. While their perspective is right, and it is true that blockchain can help in saving many resources currently used on creating records, completing transactions and storing such data, the truth is that blockchain technology does not work towards a green environment either. It leaves a big carbon footprint since it requires a lot of computing power, which is even more than the world's fastest 500 computers. Understanding the impact of this technology on the environment may also help us realize if it is suitable for the economy or not. Seventh, finding information. Blockchain technology isn't just about storing information in a secure way. It also involves the process of finding information correctly and in a timely manner. To make sure that users can leverage this technology reliably, the records stored on the blockchain will have to be quickly and easily accessible to the users, and it should be indexed accurately so that users can find information quickly. These are some of the ways in which the blockchain limits users. While there is a lot of potential behind the technology, users have to understand that blockchain is still in its early stage of adoption, and the ease of using it will increase eventually with more companies finding solutions to the limitations above. The blockchain technology was the brainchild of Satoshi Nakamoto. It was introduced in 2008 and since has grown considerably. People have become more aware of the uses of the blockchain, and more people have started using it too. When Bitcoin first came into use, its acceptance was high in the dark net and low among the common people. Even till this day, there aren't enough companies around the world that support Bitcoin, which makes the technology behind it less popular. Since it was earlier related with the dark net, blockchain technology started off with a bad name. Fewer people wanted to dabble in it, and even fewer realized its actual potential. Eventually, Bitcoin gained more relevance and more cryptocurrencies saw the light of the day. Companies are now beginning to realize how disruptive this technology can be and how important it is for them to utilize this technology effectively. Blockchain is starting to see more uses, and its advantages are being realized by governments too. Investing in cryptocurrencies is becoming more common than before, and many countries are gauging their response to such changes. The blockchain has its advantages and its limitations too. Like most technology, it can be used for good and for bad. Finding the best way to put this technology to use and ensuring that it can help companies earn better profits and conduct businesses more effectively is currently being explored by governments. Blockchain technology will soon be transforming the economy and encouraging the creation of new business models which leverage this technology. This is already in action with companies exploring ways in which the technology can be used. Startups are also looking for ways in which blockchain technology can be used. With higher security and lower transaction costs, blockchain technology can be the future of businesses.